second quarter GDP number may be weaker than expected, but I'm not too worried about that because I think in the second quarter, Thai economy was bombarded by rising inflation as well as higher interest rate expectation overseas. But Bank of Thailand already raised policy rate by 25 basis points recently, and I think most investors would think that with high inflation number, Bank of Thailand may be behind the curve. But if you compare headline inflation and core inflation in Thailand, actually core inflation is still not too bad. The latest number was about 3%, while headline inflation was 7.6%. So you can see that stripping out energy and food costs, domestic inflation for the core inflation was actually not that high, and this showed that we actually are not suffering from demand pull inflation. So I think Bank of Thailand probably wouldn't want to raise the rate too aggressively because Thai economy just start picking up on the back of more foreign tourists, as you just mentioned, and I think we probably need to buy more time, and the central bank may not be too worried about the weak baht because that will allow more foreign tourists to come into the country. But as cheaper baht, a weaker baht means cheaper for tourists to come in to spend their money in Thailand.
Mr. Kasem, this is JP Ong. I'm glad you brought up the Thai baht there because while the baht has seen a lot of significant weakness for the year, in the last couple of weeks, you've seen it actually strengthen on part because of the Bank of Thailand's recent rate hike, but also because of the return of tourism in Thailand. And, when you take a look at how seemingly dovish the Bank of Thailand is compared to other central banks in Southeast Asia, is there a growing bet that these returning foreign tourists that are expected to pick up in the second half are really going to be the magic bullet that will solve, say, the baht's weakness, the economic recovery in Thailand, and really just be the one magic spell to sort of fix the economy? And is that a little bit too much to put too much? Is it a bit too risky, perhaps, to do it too much on tourism as the big solve to help the Thai economy recover?
Yeah, very good question. Actually, we have to put numbers in perspective.
Sure.
For example, in the first half of this year, we only had 2.1 million tourists coming into Thailand. In the second half, we expect about 7 to 8 million tourists. So that, basically more than triple from what we had in the first half. So for the full year, this year, we may have about 9 to 10 million tourists. And come next year, we expect the number of tourist arrivals to jump to 20 million. So for this 20 million, it may seem bullish. But when we look at the number in 2019, Thailand actually welcomed almost 40 million tourists. So 20 million tourists next year, just half of what we saw in 2019. So I would think that 20 million tourists for 2023 wouldn't be too bullish. And if you put the number, into calculation, the additional 10 million tourist arrival in 2023 that we expected, with about 50,000 baht, tourist spending per head, or around 1,500 US dollar per person. So that amount to about 3% of GDP from the increase in the tourist arrival alone in 2023. So I would think that yes, the tourist spending would be one of the magic bullet to boost Thai economy. But I think it's not too risky to assume a big jump in the contribution from foreign tourists, in my view.